Hello everybody, did you really think that I wasn't going to make a video on AT&T stock after it fell 10% this week? Of course I'm going to chase the views and make an AT&T video. Hello everybody, welcome back to the channel. Today we're going to be going over AT&T's earnings report, why the stock went down, what I'm doing with the stock, etc. I've made a lot of videos on AT&T in the past and I'm just looking for it to be a slow growing stock that pays a reliant dividend for me. But the stock's actually been doing really well recently and I can't make any videos to get views off of it. But I wouldn't lie if I said that my heart skipped a beat when I saw that AT&T Earnings had came out and that the stock was down over 7%. I've owned AT&T for 2 years now and it's been a bumpy ride, but we're on the way up. So stick around and I'll be revealing how much money I may have made or I may have lost with AT&T so far. Also, my name's Ryan, I'm 16 years old, I do dividend growth investing for the long term. It would mean a lot if you find content like this valuable or interesting. I have a portfolio update that I do every month, that's probably my best videos that I make. Go check that out. Of course, smash the like button while you're at it, subscribe as I mentioned, and of course, roll the intro.
Hello, I like money.
Alright, so prior to what the stock price actually said, the earnings actually did beat, Wall Street estimates. Their EPS, they beat by 6 cents, which is very good to see. They beat their revenue estimates by $194 million. AT&T also had record level of customer additions, which is amazing to see. AT&T also invested $24 billion in capital expenditures. This is very good because over the long term, this is just going to be a good investment for AT&T to get more free cash flow, so that I definitely approve of this. So Ryan, AT&T added all these new customers, they beat revenue. Why is the stock down? The stock is down because their free cash flow levels were down. AT&T had $1.6 billion of free cash flow, which was way below the expectations of $4.6 billion. With free cash flow, you can do a multitude of things like pay out dividends, do share buybacks, reinvest in yourself, which is capital expenditures, which is what AT&T is doing right now. So AT&T's free cash flow will be negatively impacted in the short term right now because they're making these capital expenditures and hopefully they'll make a return on investment over the long term. AT&T are making these investments in fiber and 5G, which is going to be a huge part of them for the next decade and is key for them to be a telecommunications business, which they weren't in the past. AT&T AFL wasn't focusing directly on telecommunications and I wanted to invest directly into this, 5G. I also got part of that Warner Media stake when I invested back in the old AT&T, but the new AT&T is going to be a straight-up telecommunications company, and I want to invest for 5G growth in the future. So this should actually be a good thing for AT&T shareholders over the long term, that they're investing this money back into themselves and not paying some ridiculous dividend. Now here's an interview with John Stankey, the CEO of AT&T.
It was better than expected or in line with expectations, with the exception of the full year cash flow numbers that you're now expecting for the full year. I know you adjusted those numbers to $14 billion from what had been $16 billion originally. Stock's trading down. That's the only number that I can kind of see that would maybe be causing that. So why don't we start with that? Why are you lowering the free cash flow estimates for the year?
Yeah, it's a good question. I think that's a pretty accurate read, Becky. I would tell you that, first of all, we've had great success in the market. And I think if I went back to January and late last year, as we were talking about our expectations for growth in the market, they were far more tempered than what we're actually seeing. And as you just reported, 813,000 postpaid phone net adds, are best in 10 years. That's really strong. We don't know what the rest of the industry did. I expect that's going to be pretty strong relative to the industry. That takes a little bit of cash to do that, and that certainly wasn't our expectation going into the year. In addition, as you also heard, we hit our end-of-year target on mid-band 5G spectrum deployment early, and we've got 70 million potential population covered right now. That's a big change. We did over 2 million new connected locations in our fiber build, which took a lot of capital to do that. So the machine's running pretty good right now, and my decision was to kind of let it run because these are really important growth foundational issues for the business moving forward. We did the hard things we did in restructuring the business last year to give us the latitude and flexibility to do these types of things. And, then we've also seen a little bit of working capital issues as we've moved through it. There's clearly some dynamics going on in the economy where we have customers that are stretching out their payments a bit. We expect that they're going to continue to pay their bills, but they're taking longer to do it. That's not atypical in an economic cycle, and we're starting to see maybe the bottom end of the subscriber base making some decisions between, am I paying this bill this month or that bill this month, given some of the pressures they're seeing at home.
Let's break that down, because those sound like two very different stories, almost a tale of two cities at this point. What you're seeing is you were spending more to lay that fiber more quickly than anticipated. You got to where you wanted to be with 5G 6 months ahead of time, so you were spending more on that end of things. You also had very strong demand for things like iPads and cell phones, so you guys were spending more money to load up on those things. Am I hearing that correctly?
That's correct. And look, I expect we're probably going to be in a more tepid economic environment moving forward, but these investments we're making are long-lived assets. These are things that are going to build the franchise for decades to come. And when you think about our speed to market and what we want to do to make sure that we've got the best infrastructure out there to support what we want to do in the market, I don't think backing off a long-lived asset, given the economic flexibility we have right now and the restructuring of our balance sheet, is the right decision. In fact, frankly, in an inflationary environment, getting more of it built when it's cheaper and allowing it to get into service and then inflate as the economy inflates is probably a long.
Another reason for this decline in free cash flow is because customers are making later payment on their phone bills. This makes a lot of sense due to the current economy that we're in. It's a short-term problem, and AT&T is still getting that money, which I think a lot of people aren't seeing. I've also been asked by a lot of people if AT&T will do another dividend cut because of these low free cash flow numbers. And I would say absolutely not. AT&T made their new dividend with the thought in mind that they'd be investing future free cash flow in new investments and capital expenditures. And AT&T's management probably expected this drop in free cash flow. So, Ryan, are you going to be buying AT&T? I bought 3 shares of AT&T at like $18.57. To see if I'm buying more AT&T, you're going to have to watch the portfolio update on Saturday. But guys, in all seriousness, when stocks dip and decline really fast because of earnings, I like to take a few days to let the news sink in, and then I'll make a more probably thoughtful decision. I did this with Target and it's worked, and there's been other stocks that I haven't bought because I thought through more. But guys, in conclusion, with AT&T stock, the stock is down because they're making investments in themselves, and due to that, their free cash flow levels are low, and because of late payments. This leads to short-term struggles, I guess, for AT&T, even though they probably expected this with these expenditures, and presents a good long-term buying opportunity for the long-term investor such as myself. I appreciate you if you've made it this far. It would mean a lot to me. Help a brother out. Smash the like button. Subscribe. Turn on post notifications for more content like this. And, of course, do dividends, stocks, not drugs. Have a good one.